Address the issue that Kyle Bass laid out, because we tend to think of this as a trade dispute, and it's involving goods and services and maybe some opening of markets. But some people are saying this is more a national security issue. This is really the future of the country, and we shouldn't be as worried about economics. In fact, Kyle Bass said that.
Indeed, and his points really do paint a stark picture of the difference in the social, political nature of the regimes and societies, political systems, and so forth between the U.S. and China. But the point he's making when he talks about, the asset management community, the institutional investors, his recommendation that they not pursue deeper investments in China speaks to the other and even larger dimension of China's economic rise and its planning for this year, which is not really about the trade war. It is about their capital account liberalization. And the opinion that he holds obviously stands in stark contrast, and that's why his warning is so strongly worded indeed about how the U.S. institutional investment community is looking with quite sanguinely actually at the opportunity to invest in China's debt, equity, and other markets this year as things open up, and that's trillions of dollars, right? As you know, because. The total value, if you will, of foreign holdings of Chinese debt and so forth is relatively low, but could stand to quintuple over the course of the next several years, and that's going to represent 10 or 15 trillion dollars potentially. So, an order of magnitude greater significance than the stakes here in this trade war. So it is an interesting point that he's making, an important one.
Well, and Parag, where you point toward, if I'm correct, is this is a more fundamental dispute. The markets may not have appreciated exactly what's at stake and how fundamental it is for both countries. And that leads me to the question of who has the upper hand? Can we calculate that? Let's compare the two economies, for example. I can put up a chart that shows the rate of GDP growth in China as opposed to the United States. China still is growing substantially more than the United States, but it is coming down some, whereas the United States is on an uptick. President Trump seems to think he is holding the high cards in this game.
Well, I mean, that wouldn't be the metric to use in terms of determining who has greater leverage in this geoeconomic contest. And as you say, this is a national security issue, a geoeconomic issue, every bit as much as it is just what has been perceived wrongly, of course, as a short-term trade issue. Because, of course, China, with its, in PPP terms, economy of more than $20 trillion is going to decelerate. Indeed, and, that's been the case since before this trade war began, as we know. And, of course, if you're looking for tactical victories, of course, as some consequences of the trade war have been supply chain shifting out of China at an accelerated rate towards Southeast Asia. But for China, those aren't the metrics that they would use. What they're looking at is achieving autarky, greater self-sufficiency. And that is the true holy grail, David, of geopolitics. Not simply to be the largest economy, but to have greater self-sufficiency. And that, in a way, is what this trade war is inadvertently accelerating their efforts towards. Let's remember that Made in China 2025 and its antecedents in terms of other 5-year plans that have aimed at greater self-sufficiency in technology are now going to accelerate. Their efforts to either domestically produce silicon wafers, and chips and other high-tech components and products are going to accelerate because they fear that they're not going to be able to get them from Intel, Qualcomm, and other U.S. suppliers as reliably as in the past because of our export controls. And so that is actually going to benefit some of our geopolitical allies, but our geoeconomic competitors like Japan and South Korea. So this is a multiplayer game. It's a tug of war. So we can't really measure geopolitical victories in such a narrow time horizon the way one can if you're just looking to see who's scoring points in a trade war.
So, Parag, that's a terrific view of the Chinese and how they see the longer-term strategic goals. Play the same game from the United States point of view. How can we play this strategically and perhaps get away from just the bilateral question of Beijing versus Washington? I mean, this goes to the center of your book, actually, about the need to look beyond China when we looked at Asia. We could put up a chart, actually, that shows the rate of growth. And if you take the 7 countries that are likely to grow the most between now and 2030, a number of them are from Asia, in fact.
This is a great point, and that data point comes from some new research from Standard Chartered, which I've been citing, quite heavily because it's a reminder that the rest of Asia is now outpacing China in growth. Obviously, starting from a much lower base, but given the younger demographics and the rapid investments that are being made in infrastructure and the liberalization going on in those economies, one can safely predict that there's going to be a very steady growth in those economies, like India, through Indonesia, Indonesia and the Philippines for the next decade or more. And they're obviously very eager to capture those supply chains that are coming out of China. So indeed, the Asian story is a lot bigger than China. And that's why, from the corporate American standpoint, let's remember that part of the irony of this trade war is that it is harming some of our most productive, most dynamic, most profitable sectors in technology that are now going to struggle in the Chinese market. So they are going to have to redirect their efforts even more towards capturing market share in those other economies. And of course, as they get there, they're going to realize that one of their biggest competitors is Huawei, right? When it comes to issues like 5G. So one of the things that the U.S. does need to start to do is to think in terms of national champions and greater public-private cooperation in the internationalization, the way our European allies and the way Asian countries are already very accustomed to doing.
So Parag, is it possible that President Trump is actually playing a more strategic game than sometimes we in the media give him credit for? In this sense, we hear a lot about disruption of supply chains. Are we starting to see some of those supply chains change already away from China and toward, for example, Southeast Asia, toward Indonesia, even toward India, countries like that, that might in the longer term redound to U.S. benefit?
Well, that is something that has been, again, underway since well before the trade war. Japan was the first major power with a huge investment footprint and portfolio across Asia to massively redirect its FDI out of China towards Southeast Asia, beginning almost 10 years ago. The rest of us, quite frankly, are just following Japan's lead in that regard. Now, when it comes to the accelerated impact that's going to have on growth in those non-China emerging markets, so Asia ex-China, that's a very positive story. However, for American companies to truly benefit, the Trump administration would have supported the Trans-Pacific Partnership Trade Agreement rather than backing away from it. Because again, right now, the U.S. not joining the TPP actually benefits Canada, Japan, Australia, South Korea, and other countries that are now active in the region. So some of the other data shows us how their exports are growing while ours are receding in the region.